In this video, I'll talk about the closing entries and why accountants record them. At the end of each accounting period, the general ledger must be prepared for the next accounting period. We call that the closing process, and there are 4 steps or tasks that accountants must complete to close the ledgers for any accounting period. Why do accountants close the ledgers? We spend all this time setting up all these accounts and posting to them. Why are we now closing them? Well, first, we call the process the closing process, but we're not permanently getting rid of the accounts. We're only clearing them of all of the transaction in the accounts. It's important that accountants be able to report on each accounting period separately rather than commingle the numbers with other accounting periods. That is why we close the temporary accounts to these accounts so that these accounts have a 0 balance at the end of the accounting period. Temporary accounts include revenue and expense accounts and owner's withdrawals and dividends. So what are those 4 steps in the closing process? First, we'll close all revenue accounts and those income statement accounts that have credits to an account called income summary. Step 2 is to close all expense accounts and all other income statement accounts with debits to the account income summary. In step 3, we close the income summary account to the capital account, and in step 4, we close the owner's withdrawals and dividends to the capital account as well. After the closing entries have been posted, the capital account reflects the result of operations for the period. So let's look at this process step by step. One of the closing process involves closing out all revenue accounts and any other income statement accounts with credit balances through income summary. There's only one income statement account that is a revenue account, and we don't have any other credit balances in our income statement. So let's close out the fees income account, which has a credit balance of $47,000. How do we close out the account? We debit the account for $47,000. What account do we need to credit? That's right, income summary. And there you have it. Let's write that journal entry into the general journal. The first step is to write closing entries on the first line, followed by writing the date on the second line into the date columns. Next, we'll write fees income into the description and the amount of $47,000 into the debit column. On the next line, we slightly indent and write income summary on the description into the description column and the amount of $47,000 into the credit column. We're now ready for step 2 of the closing process. Step 2 of the closing process involves closing out all expense accounts and any other income statement accounts with debit balances through income summary. There are 5 income statement accounts that are expense accounts. So let's close out the expense accounts, which altogether add up to $13,333. How do we close out the expense accounts? We debit income summary first for $13,333 and then credit each expense account. Let's write that journal entry into the general journal. We'll write the date into the date columns. Next, we'll write income summary into the description and the amount of $13,333 into the debit column. In the next line, we slightly indent and write salaries expense into the description column and the amount of $8,000 into the credit column. In the next line, we again slightly indent and write utilities expense into the description column and the amount of $650 into the credit column. On the next line, we'll write supplies expense and a credit of $500, followed by rent expense and $4,000 on the next line. And lastly, we'll write depreciation expense on the next line and a credit of $183. That's it for step 2. And we're now ready for step 3 of the closing process. Now that we cleared the income statement and moved all revenue and expense accounts to the income summary account, we need to determine the balance in that account. Why? It's an additional check that the amount is our net income, and we can compare it to our worksheet to ensure that it is the same amount. In our case, we have a balance of $33,667, and it is the same amount that we had on our worksheet. We're now ready to transfer that amount to the owner's capital account. We debit income summary first for $33,667, and then credit the Trayton Eli capital account. So let's write that journal entry into the general journal. We'll write the date into the date columns, and next we'll write the income summary into the description and the amount of $33,667 into the debit column. In the next line, we slightly indent and write Trayton Eli Capital into the description column and the amount of $33,667 into the credit column. Last step in our 4-step closing process involves closing the last temporary accounts, the drawings account, and the dividend account to the owner's capital account. We only have a drawing account with a debit balance of $5,000, which we need to close out to the owner's capital account. We debit Trayton Eli's capital and then credit Trayton Eli's drawing. So let's write that journal entry into the general journal. We'll write the date into the date columns, and next we'll write Trayton Eli Capital into the description and the amount of $5,000 into the debit column. On the next line, we slightly indent and write Trayton Eli Drawing account into the description column and the amount of $5,000 into the credit column. There you have it. The 4 steps of the closing process include closing revenue and any other income statement accounts with credit balances. 2, closing the expense accounts and any other income statement accounts with debit balances. 3, closing the income summary account. And 4, closing the drawing account. The next step is to post the journal entries in the general ledger.